Good evening, everybody. Hello. Good evening, everybody. Welcome to the meeting. The first item of business is election of chair. Is there a nomination, please?
Thank you. I'd like to nominate Councillor Rachel Burgess, please.
And is there a seconder?
I would like to second her.
Are there any other nominations? Okay, you're in the chair, Rachel.
Thank you very much, everyone, for that. So the second item is the vice chair election. So are there any nominations for vice chair? Rob. Okay. Do we have a seconder for nominating Stephen? Yep.
I'd like to second.
Martijn, thank you. Are there any other nominations for vice chair? No? Okay. Stephen, you're vice chair. Thank you very much. Okay, before we begin the main business, I just wanted to welcome everyone to a new year of the Audit Committee. A particular welcome to Christine, who is our new independent member. Absolutely delighted to have you on board, Christine. So very much welcome to you. Also to welcome Joseph, who's a new member of the committee this evening. So welcome to you, Joseph, as well. As usual, could we please do just introductions of officers and guests to the meeting, Paul? Thank you.
Yeah, sure. I'll start online. We're joined by Jonathan Brown, partner at KPMG, who are our external auditors, and supported by Edward Mills from KPMG as well. We also have Graham Cadle, who's our Service Director of Finance, and Mark Thompson, who is our accountant, Chief Accountant. Then in the room, to my left is Neil Carr, who's clerking the meeting tonight, and then Susan Parsonage, who's the Chief Executive, and Catherine Hickman, who's the Head of Internal Audit and Investigations. And myself, I'm Paul Osson-Ellis, and I'm the Governance and Risk Manager.
Thank you very much, Paul. So first item is the minutes. Does anyone have any comments on the minutes from the previous meeting? No? Okay, we're all happy to accept those as correct record. Could I see a show of hands of those that were present, please? Okay, thank you. And do we have any apologies for the meeting this evening?
None received, Chair.
Okay, thank you. Also, just to note, as an extension of the minutes, the action list, an updated action list was circulated to members. So does anyone have any comments on the actions? Is everyone happy with that? Okay, great. Are there any declarations of interest? Stephen.
Thank you, Chair. I need to declare an interest in item 11, risk 14, as my wife and I are working in Borough Council foster carers.
Okay, thank you very much. Okay, are there any public or member questions?
None of either, Chair.
No? Okay, thank you. So we'll move on to the first main item of business then, which is the external audit plan. So I'll go over to our colleagues from KPMG for this, to introduce this item.
I'm just going to hand over to Ed.
Okay, that's fine. So we've brought our audit plan for you to review today. Obviously, we've submitted this in advance, so I'm going to take it largely as read, particularly as we brought our ISO 260 only recently to this committee for last year's audit, which has quite a lot of similarity in it. But if I pull out the key points for you today, firstly, on our page 4, the materiality figure you'll note is quite similar to what we had last year at the moment. This is as we've used the 23-24 number. However, we will be looking at that before we begin our audit when we see the position as it finally lands, and to see whether that is the relevant starting point for our materiality. Our audit risks are across pages 6 to 12. These remain somewhat similar to last year in that we have the valuation of land and buildings significant risk in there, the standards-driven management override of controls risk, and the pensions valuation risk. They all remain the same. I'm happy to talk to them in more detail if needed. But you'll see that there are some changes from then onwards. On page 10, we have rebutted the expenditure significant risk in year. Having done work over it in the previous year, we found no issues with the expenditure recognition and decided, given the financial position of the council, that we would reduce the level of risk around expenditure at the year end. We've also reduced the risk around investment property valuation. This is largely because we looked at a large proportion of the investment property balance in the prior year, and there's no increase to the number of investment property that the council holds. Page 11, the IFRS 16 is a new risk. To translate that, that's leases, new leases standard, whereby operating leases that used to be off balance sheets will be now on balance sheet, and you'll see them as an asset with a corresponding liability. We don't expect this to be something significant for the council, but as it's a new standard and has a lot of new workings alongside it, we've brought this to your attention, and we'll be obviously providing some focus on it as well during our audit. Page 16, that's value for money. Just to note that our risk assessment will be coming hopefully to the next committee. And finally, on our page 23, just to draw your attention to our independence, which we're required to do every time we bring an audit plan for you to review. I think the only area that I haven't really talked about yet is the backstop position. I think John wants to come back in on that, and anything else that you might want to add to my whistle-stop tour before we have questions. Over to you, John.
Yeah. Well, should we pause there for questions, and then backstop might be one of the questions. So let's do that.
Okay. Questions, comments from the committee? Yeah, let's start with Martin and then we'll go to Christine.
I have two questions. First, I know both KPMG and Woking Borough Council have worked hard to address the elements of the opening balances that are still impacting by previous disclaimers. But despite all the hard work, we might still end up with a disclaimed audit opinion for 2024-2025. Maybe could John maybe address the concern of some of our residents and members of the audit committees that a disclaimed audit opinion does not necessarily mean that no assurance can be given that our financial risks are being managed and our controls are working effectively. I have another question, but maybe...
Yeah,
let's take that one first.
Let's take that one first. So I think it's really disappointing that we're in this position, isn't it? That disclaimed opinions, you know, when you read them cold without any context, looks like you're getting no assurance, and we're not signing off. But actually, the context is all the backstop arrangements, all the LARIGs, all the things like the audit plan and the ISA 260, where we talk about that we're in that framework of building back assurance and getting to the kind of promised lands of clean audit opinions. So when you read it with that context, then you can get a lot of assurance that things are happening that should be happening. So you'll remember in our reporting last year, we were saying, yeah, you're going to get a disclaimer opinion, but it's basically for those brought forward balances that we can't check because we'd have to do a lot of work. Where we can, you know, cash in the bank, valuation of assets, etc., where we can get assurance over that, we've looked at those and we've reported back that we wouldn't, you know, we would sign up to those if we could without the opening balance position. In terms of 25-26, you'll remember that. Sorry, 24-25. You remember when we spoke last, the regulators and the various audit regulators and LG regulators were discussing whether there was a shortcut to get assurance over the brought forward positions effectively. And, you know, to be blunt, there hasn't been a lot of movement on that. They're still locked in discussions on how to affect that quickly. At KPMG, what we're trying to do is just work through that ourselves, and where we can, we're going to try and push for, rather than a disclaimed opinion for this year's account, say qualified opinion, which basically again moves towards the promised land, but would say, you know, apart from these balances that we can't quite get at yet because of they're the amalgamation of, you know, 2 years worth of audits that haven't been looked at, we'll be able to get there. And so you'll get hopefully you'll get an increased level of assurance when we come round to sign off this year. Again, it's still early days, and we're waiting for the white smoke from the audit regulators, but that's what we're aiming for. And you know, like I said when we reported last time, that's where management are really pushing us to get to. So we're both pushing or pulling in the same direction to get to clean opinions as quickly as we can.
I have one more for you, John. A question was raised at a full council meeting on the 20th of February that suggested that KPMG had told the Audit Committee that there were significant control deficiencies and unreliable controls within Woking and Borough Finance Department. And I wanted to ask if there was a fair representation of the view of KPMG, because the question gave me the impression that it was raised in the belief that KPMG had uncovered indications suggesting that appalling administrative and financial deficiencies are being covered up. I just wanted to test that with you guys,
okay,
if that was true or not, or if that reflects your view.
Yeah, I would say that's a very different view to our recollection, and hopefully your recollection from our last meeting, which was that we raised what we call significant control deficiency, and therefore that's where the member is probably picking that up from, and that was the one we discussed on journals, which basically says if you post a journal, you can edit it without it getting approved again, and management responded to that, and we had that discussion last time. We put that as a significant control deficiency because it's linked to a significant risk, and that's very much auditing standard speak on what we have to do. So in our ISA 260 that you'll have seen one significant control deficiency. The actual tone of the ISA is very different to that. And certainly at the meeting, I think we praised management, and I suppose by saying that I'm praising them again now, in that they did a really good job of working through what has been, you know, a really tough number of years with previous auditors and you know, not being audited. So they did really well to respond to our challenge, and you know, being new kids on the block to a certain extent and asking those fundamental questions. We actually said they did well. So you know, if you read one line out of context, I could see how somebody might come to that conclusion, or you know, if there's a reason why they only read that one and not the rest of it, then you can make your own minds up, I suppose. But it's certainly, those comments certainly don't match with the tone in our response of our findings. And I think that the last bit about uncovering appalling, I just don't recognise that at all.
Thank you, John. I hope that your answer has addressed the concerns that maybe members of the Audit Committee might have had. Thanks.
Thank you. Christine.
Hello there. I've just got a question on page 4 of your report about materiality. In the notes, it talks about the detection of misstatements, and it says that the materiality is being driven by your expectations of an increased level of undetected or incorrect misstatements in the period. So I just wondered why there was that expectation.
What? Sorry, just to remind us what page you're referring
Page
to there.
4 of your report. It's talking about the lower level of materiality driven by your expectations of an increased level of misstatements.
Sorry, I've managed to open up our reporting from last year to respond to that question and close the this year's down. Just give me a second. Right, I'm back now.
So yeah, it's page 4 on the left, on the about 3/4 of the way down the text on the left. That's where the statement is.
Driven by our expectation of an increased level of undetected. Yeah, I think that's our standard wording, and it basically says if we've set materiality at 12, rather than work to that, we actually work to the performance materiality of 75% of that to allow for what in auditing speak is aggregation risks. But I don't think we have an expectation of an increased level of undetected or uncorrected misstatements this year. So we'll look at that and correct that.
Okay, thanks very much. Thank you.
Okay, Mike and then Stephen.
I've got a number of questions, but just picking up that last one actually. And you often hear me refer to the good old days, but when I was in audit years ago, one of the references for materiality setting was 1% of income, 1% of turnover. Now, in a council like us, where the income's roughly the same as expenditure, 2.5% of council expenditure did seem quite high materiality level to me. The other thing actually connected to controls, I think this time last year you mentioned it was mainly a substantive audit, and I wonder whether you're placing any reliance on controls this year to give more compliance type audit. I've got other questions, but perhaps address those first. Thank you.
Yeah, so materiality is an interesting question, and I would say yes. When I started working with KPMG, 1% was the figure. I think over time that has changed. So for our LG clients, our kind of range is between 1.5% and 3%. So being at 2.5 gives you a flavour of where we think you are in the overall risk profile of our LG clients. So it was that's where we put you, and it is kind of consistent with LG across KPMG, and I think that's not too inconsistent to where predecessor auditors were as well. So happy to take that challenge, but that's very much consistent with the market, I would say.
Thank you.
Do you want to answer the controls one, Ed?
Yeah, I think we'll be primarily relying on substantive testing for the audit for this year. In general, we find as a whole, if we rely on controls, we end up doing a great amount of testing of controls to the point whereby if we find 1 or 2 errors in controls, that we end up doing just as much substantive testing anyway. So it's our experience to date with our public sector portfolio that we typically have a more substantive approach. That doesn't mean to say we don't look at controls, because we do. We just don't rely on controls to reduce our substantive sampling.
Did you have any other questions, Mike? Okay, let's go to Stephen and then we'll come back. Yeah, Stephen.
I've got 4, Chair, so shall we finish with Mike first? Would that make more sense? You want to come to me? Okay, that's fine, thank you. Okay. We may end up on the same things, of course. If I can, well, first of all, I just wanted to say thank you for the report. I thought it was very well constructed. I really found it easy to read and understand, so thank you for that. I thought it was a really constructive start. I know we're not quite at the start, but we're still in those earlier stages of the relationship, so thank you for that. If I can refer you please to page 6 of your report, which is about valuations of land and buildings, and if I can then point you to bullet 5 on the right hand side. Land and property values, as you know, and you've referred to it here, was previously mentioned as a concern within the audit, and you've talked here extensively about how you're going to address this. You're saying in bullet 5, we will challenge the appropriateness of the valuation of land and buildings, including any material movements from the previous revaluations. We will challenge key assumptions within the valuation as part of our judgment. All of that's great. I just wondered, as you've seen the valuations and stuff, I just wondered whether I would have thought there'd be some kind of index that would be being applied to this stuff, that you would expect sort of movements over previous years, and so therefore, if there's a discrepancy between the valuation that the council's presenting for its valuers and your own, what's the level of tolerance, or do you expect it to be spot on? I would have thought there'd be an element of tolerance, so I just want to know how much that would be before you bring it to our attention in the report. Because I just want to understand, what I'm looking for really is assurance that if there was a big discrepancy, that we would hear about it, not just it would be not included, really, is what I'm after. And also, do you feel, I'm hoping you do, that the planned responses that you've set out should address any ongoing concerns and put them to bed over the period of the year whilst you're doing this assessment and obviously in the discussions?
Yeah, sure. So there's a few things there. So you've got a lot of different valuers. So inherently, they will all have their view of the market and the future. So that acts as a kind of almost a guide that you can tell which ones might be more racier or optimistic than the others. I think you revalue on a 5-year cycle. So in very simple terms, it's not quite 20%, but you look at 20% of your land and buildings, get those valued on a kind of per asset basis, and then compare that to the benchmarks and use that as the kind of index to index the other 80% that haven't been revalued in that year. There are known LG indices, so there's lots of various indices around the various asset types and how they've moved. So we look against those. We have our own real estate advisory team that kind of helps us understand the relevant indices and compares them to us. But fundamentally, we use that materiality number that it comes back to. So if it's outside of that 12 million, then we would report it to you. There are instances, as you can imagine, where a really small change in a expectation of future rental or similar might have a big change in evaluation. So you can get very rare circumstances where we disagree something over our materiality level, but still accept it. It's quite rare. But again, we would discuss those kind of situations with the Audit Committee, and actually, I think management would have the view that they wouldn't want that kind of disagreement between their valuers and their auditors, effectively, because this is market stuff that's quite easy to value, he says, and therefore there's lots of market information out there.
Thank you. I think you've given me the answer I was expecting, which is you were looking at the 12 million. I'm not aware of how much money there is invested in this, but I just wonder whether, if the portfolio is only, say, 30 million, then you might, a 12 million difference might still be very significant proportionality, but it won't necessarily sort of be shown in the report. And what I was hoping for was that if there is a reasonably big difference, that you might flush that out. I'm not expecting an answer to that, so if you can just sort of think about that one maybe and consider when you get the answers as to whether you want to bring it to our attention or not. But maybe even if it doesn't hit the 12 million threshold, if it's a significant percentage, that you might well do that.
No, we can do that. I understand.
Chair, shall I carry on with my second question? Okay, thank you. If I can refer you to page 8, please. This is about post-retirement benefit obligations. The reason I was so interested in this is because I also represent the council on the Berkshire Pension Fund Committee as an advisory panel member. And so I've taken a bit of an interest in the pension fund and how it impacts Wokingham. And my specific question is, I was under the impression from previous questions and answers on this that the figures reported in the Borough Council's accounts came from the Berkshire Pension Fund. But in reading the report, whether it's me misunderstanding what you're saying, but it seemed to suggest that WBC might be using its own methodology on those figures provided by the fund in terms of the discount rate, the forecast inflation rate and the mortality life expectancy rate to then reach the numbers that they publish in the council's accounts. So are you saying that the figures do come from Berkshire Pension Fund, or are you saying that they're changed by WBC based upon their own assumptions? That's the first element. I can understand different schemes having different mortality and life expectancy rates based upon different geographies and things in the country. Indeed, life insurance companies have the same, as you know. But I would expect things like the discount rate and the forecast inflation rate to be consistent across all LGPS schemes. I'd just like your thoughts on that, please.
Yeah, sure. So you're absolutely right. There's some assumptions that will change based on underlying demography and where you are, etc., how old your pensioners are, those kind of things, and others that should be relatively straightforward. Again, back to accounting and auditing, it should be up for you to do your own assumptions and sense check those, both discount rate and all of that. But fundamentally, it comes straight from the pension scheme actuary. So you'll remember we audit a number of councils that partake in that scheme. So we try and we do it once and then look for any kind of differences or local variations. And very much it's as the pension scheme set in terms of discount rate and all those assumptions that we go through it within our ISA 260 last time. And we have to check any local variation of that, whether you might have a different view of mortality or future pay increases or whatever to anyone else.
Okay, thank you. That helps. So we're not sort of getting a number and then artificially changing it to suit our balance sheet. That's great. That's what I was looking for. Thank you. Okay.
And if you were, you'd know about it.
Well, that's brilliant. Thank you for that. Sorry, I'm getting towards the end. If I can refer you to page 11, please, the adoption of IFRS 16. WBC has been operating under the standards, you say, for the last 12 months. And you're identifying this as an increased risk, particularly during the implementation period that we're just going through. Based upon the size of the portfolio and your experience elsewhere where people have gone through this sort of transition, do you anticipate this having a significant impact on the council's balance sheet, or do you think it will end up pretty much in the right place once everything's been reconciled through?
I don't think it will have a huge net impact on the balance sheet. Where councils are quite late to the game, so a lot of other public sector, NHS, central government, etc., has already gone IFRS 16, and corporate reporters have gone as well. What we learn is the devil's in the detail, and it's really the completeness of those lease listings. You know, whether you've got underlying leases for some things or whether it's just happened over time and there isn't the documentation or the documentation can't be found. And then so that those are the key things we found elsewhere. I don't expect it to be a huge issue at Wokingham, but again, the devil's in the detail, and we'll report once we've had a little look at that. I think it's in a later paper as well, isn't it?
Yes, it
If
is.
I
No,
remember.
that's great. I think just also please bear in mind my earlier comments that if it's a significant amount, even if it's less than 12 million, please do feel free to share that with us so we've got a real understanding of it. My final question, thank you, on this section is on your page 22. You may have already mentioned this before, in which case my apologies for not paying enough attention. But you've obviously got your statutory audit fee, and then it talks about agreed fee variations for last year of 16,000. And I just wanted to have a bit of clarity, please, about what caused that overspend, and if there is a way, if it was something that can be avoided in future. It's not that you don't deserve your money. I'm just trying to keep hold of as much of Wokkingham's money as we can, rather than giving it to you guys. So if there was a way of not having to have any variations which cost us more money, that would be good. So I'm just wondering what we might take from that, and is there any way we can learn from that for the future?
Yeah, no, appreciate the question. I think hopefully the PSAA will publish the agreed fee variations across the board for those with disclaimed opinions, because you know, from our experience and our knowledge, it comes in a few buckets. So one is when we initially tendered the audits, they didn't include something called ISA 315, which is a new standard on risk assessment. And so we were told that that would be treated as a fee variation. So the biggest chunk of that fee variation is because of a new auditing standard that came in, and effectively that is now rolled up into the base audit fee, which is why the base audit fee has gone up. So that was the biggest chunk of that. The next biggest chunk is just dealing with the updated opinions as a result of the backstop. So again, when we bid for it, we were expecting everything to be clean and prior year audits to be completed, and therefore there was just some time about agreeing our opinions with risk and things like that. So neither of those I'm expecting to reoccur this year. The other bit that we've had a lot of places, and other audit firms have had a lot at other places, is just, you know, we asked for things and they didn't turn up, and therefore we're charging you for having to book a new team in a couple of weeks' time when it has turned up. We didn't have any of that at Wokingham, and therefore we wouldn't expect to have that next year. So if you take a step back and look at all LG councils in with disclaimed opinions, you'd probably be one of, or if not the lowest, I would say.
Thank you. That's very reassuring, and well done to our team as well. Thank you.
Okay, thanks, Stephen. I'm going to come to Rob first and then back to Mike, if that's okay.
Mine's going to be really quick because most of my questions were actually about property valuation, which I think you've just covered. So the only question I've got left is a very minor one, which says in your in the overview of the plan scope, you talk about when you will be, if you like, coming back to the audit committee with. You said the next communication will be effectively when we have the approval of accounts in November. Is that the case? Do we not expect to hear from you guys again after the audit committee? I know you're dealing with Rachel and obviously the finance team here, but do we as an audit committee not hear from you again till November?
So yeah, we're happy to give verbal updates at any committees in between. I think our audit cycle is that our kind of formal reporting. So we'll bring our ISA 260 to November, but we're more than happy to come to the meetings between now and then and give you an update of where we are.
And I'd also quickly add to that that our value for money risk assessment will be coming to a future committee before November also.
Okay, all right, thank you. Mike?
Thank you, Rachel. Just following up one of the points earlier on about disclaimed audit opinions. My understanding, the disclaimed opinion really relates to the comparative numbers, and if our opinion just does refer to that, that will give councillors some comfort that the current year is true and fair. Perhaps you could confirm that.
I agree that would give the councillors some comfort. It's fundamentally that anything where that's a cumulative position, that so reserves is the biggest headache. So your kind of usable, unusable reserves, that split is in effect predicated that those 2 years of unaudited had that right split. And the only way you can check that right split is to go and audit those 2 years. So what we're looking at is trying to do a piece of work there where we can look at that split and do some analytical procedures on it and understand some of the big movements and where you could have moved it between usable and unusable and vice versa. So that again is very much where we'd like to get to, but we will try in our narrative and our annual auditor's report to explain that, to give them that comfort that the finance team are doing well and as they should be, but they're hampered by those 2 years of unaudited accounts that we're trying to get on top of.
So presumably you'll be happy with the net assets in the opening balance sheet of the reporting period. It's just potentially a split of reserves that represent those net assets.
Yeah, and there's a few other things like there's a few other assets that are as a result of rolled up balances. So those were the ones we effectively disclaimed last year, but that is a reducing number.
Okay. The second point was on the valuation of land and buildings we've been talking about, and really through my ignorance more than anything else. I wondered whether our policy of valuing just a fifth, 20% of our cost of land and buildings, or valuation of land and buildings, is sort of applied for other local authorities as well. Are we an outlier, or is this quite typical of the public sector?
It's quite common. Your underlying the underlying what the land and buildings are and how difficult they are to value is relatively straightforward. So you wouldn't want to do it every year. 5 years is about right, and rather than do it all every 5 years, a lot do the 20% a year. Where you've got more interesting investments, you might skew it so you do the ones that have that volatility and value a little bit more often, but based on your underlying, then it's very, very common.
Thank you. That's useful that we're not an outlier, I think, with our accounting policy. The next question I had was on revenue. I noticed on the pensions IFRS 16 we're adopting for the first time. Is that true also of IFRS 15 on revenue recognition? And if it is, I suppose I'm a bit surprised we haven't mentioned that in the audit approach and reviewing our revenue streams using the 5-step new approach.
I don't think IFRS 15 is new this year for you.
I work in the for a national charity, and certainly IFRS 15 and 16, it's our first year of adoption at the same time.
Okay, it's not the case IFRS 15 has been a number of years.
Okay, good. If that's true, good. Thank you. Finally, on page 21 of your pack, we've got the Audit Committee approval of the accounts in November, which hopefully will be the final version. And I'm a little bit worried that we're talking about signing the accounts in February, given our issues over the last few years and rushing around to sign it a few days before the statutory deadline. And I wondered whether that could be brought forward. I mean, I assume the accounts will be in their final version to us in November.
Yeah,
the timetable.
Yeah, that's very much the plan. So we want to come to the November Audit Committee with, ready to sign. And it will depend where we get to. So if we can get to that qualified except for, then we will sign them then. The slight issue we've been told is if you're disclaiming, then a part of the disclaimer says you've effectively run out of time to the backstop. And so the view is, how can you sign up to that if you've still got 2 months to go? So again, we're just trying to get round that. And so the plan is we come to November with hopefully just qualified opinions that we can sign. If we have to disclaim, then we might have to wait till February to sign them, which I know sounds ridiculous, but that is the guidance we've been set at the moment.
Okay. Well, I suppose we can be absolutely ready and it's just purely signing. So
Yeah.
all the work is done in November and December, and Rachel can have Christmas off. Thank you.
Okay, any other questions on this before we move on? Okay, Sam?
Yeah, just a quick question. I was more just keen to understand more around ISA 315. That's this new thing that's come in. So just keen to understand, what the implications are for this council on the IT side of things, and also what your thoughts are just around any risks associated on the data integrity side. So I think that's going to be a key thing, particularly with all the things going on globally at the moment.
Yeah, absolutely. So again, that fee waiver, ISA 315 was in the one we audited. So we got our IT guys involved up front that looked at the controls embedded in the system and all the kind of underlying IT understanding with the various layers of IT and the controls. So they were happy with what they found, albeit they're really cognizant that the cyber risk and data integrity risk continues to rise. But from what they saw and the discussions they had with the IT teams, they didn't bring any particular new risks.
Good to know. Thank you.
Okay, thank you everyone. I think we'll move on to the next item. Thank you to KPMG for that. So the next item is the accounting policies. So I think it would be over to Graham to introduce this one.
Thank you, Chair. The report, if we have any changes to our accounting policies, we bring a summary of those to the committee, usually annually. For this year, there's 3 policies that we want to update you on. One change, which has been discussed already, around leases, and 2 are updates on infrastructure assets and pooled funds, which have been issues that have been around for a while. They're quite complex accounting changes. They don't have a significant change on the bottom line, and we tried to explain them hopefully in a clear way for everybody to understand. So very briefly, in terms of leases, it just means that operating and finance leases are now dealt with in the same way. I think it's already been slightly discussed that we now show the full value in our balance sheet, but there's a credit and debit entry. In the report, it outlines that we've gone through and done a full assessment of the leases we have at the moment, and we've made amendments to take that into account. And again, as explained previously, that'll obviously be audited, and we'll check through those arrangements with KPMG over the coming months. The infrastructure assets issue has been outstanding since 2022. It was a problem that was found by the auditors. An override was put in place while a solution was sorted. As you probably remember, it's quite a significant accounting issue in terms of the resources required, if not necessarily changing the bottom line. There still hasn't been a resolution to that, and that override has been extended now until 2029. So we're continuing to do some work to understand the potential impacts for us, but we're not doing significant work because until we understand exactly what that solution might be, we could be spending a lot of time on the wrong solution. And finally, pooled investment funds, again, hopefully straightforward. It's just the way they're accounted for. We don't have any, so there is no impact to us on this year's account. So very happy to take any questions. And Mark, who's done all the hard work as always, is here to pick up any more technical issues.
Okay, thank you, Graham. Could I just start off the questioning on this one? Just thinking from a control point of view, how have you made sure that you've captured all the operating leases that you have, and how are you recording those? You have presumably you have some sort of register that you're recording them on, but I mean, principally, how have you made sure that you've captured and found them all to make sure you're accounting correctly?
Yeah, I can answer that. So we've set up a project team in finance, so we spent a lot of time over the last 6 months working with colleagues in legal services and property services to try and get copies of all the leases we have. We've looked through all of our financial counts where we code expenditure to leases and to rental income to review those, to assess those if there's any amounts of expenditure or income that we haven't captured on our list. That's the main process we've undertaken. We've now set up a spreadsheet, detailed spreadsheet with all the calculations. We're putting our leases for our asset register to make sure we get the accounting correct. I think that's the main bits we've done. We've tried to look as much as we can. We've spoke to budget managers and reached out to services. We spoke to procurement colleagues because sometimes they're aware when we enter new contracts if there's underlying leases built into those, so nothing's come back from that as well. So it feels like we've done a lot of work, and obviously it'd be good to see what KPMG look as well in terms of our controls and process.
I think just to add to that, it's been quite helpful that it didn't come in as quickly as first anticipated. So that's given us that extra time to do that due diligence, engagement, and I guess as far as possible, double check we have everything.
Okay, thanks for that. And on page 51 of the pack, you note that you've identified 8 properties, 1 vehicle and 1 school printer, which will now be the right of use assets. But wouldn't the school printer be too low value? I was a bit confused by that.
Yeah, so I did check with the team today because we've set our de minimis at 10k. But that's what I've been told by the team. It's a school printer, and it's coming out just above £10,000 in terms of the calculation for the right of use value. But that's something we will double check.
Yeah, okay, if you could check that one, that would be good. Okay, I've got a couple of others, but I'll open it up to members' comments or questions. Martin, yeah, and then Stephen.
I just had maybe more of a clarification that I understand it properly. So up to last year, if we rented something, we just recorded the monthly rent as an expense. Yeah? But now we have to pretend we bought the right to use the object and record it as both an asset of something we own and a debt, sort of the money that we owe. Is that correct, sort of thing? Okay. And then all the small stuff under 10,000 and short rentals, they still get the just record the expense type of treatment. Is that
correct?
That okay. Then at least I understood. Okay, thank you. Yeah.
Okay, I think Stephen, did you have a question?
Thank you, Chair. I just wanted to ensure I had the right understanding. So are you saying that going forward, this is on page 51, again it's about the de minimis issue. Maybe I'm not so hot on I think it's Latin probably you're using there. But anyway, are you saying that no asset with a value of less than 10,000 will be leased going forward? Is that what you're saying in this?
No, the council may continue to enter into leases on if it's a financial business decision that represents value for money. However, in terms of recognising that as an asset on our balance sheet, if it's below £10,000, we would say that's not material enough to put on our asset register.
Okay, thank you for that. Leases normally involve some kind of margin to the leasing company where they charge interest and make profit. And also, if you're paying for it monthly or quarterly, you're going to end up with it being a recurring item in the finance team and in reporting and all the rest of it. So I just wonder whether you might want to take a finance perspective on this and just dictate to the businesses and say, we're setting this as a minimum level below which don't bother leasing something. And if it's printers or something, and it's on a group deal, then you look at that from a bigger perspective rather than each individual printer, because presumably you're paying for the whole lot on a monthly basis. But I just think that having such small items, you're just clogging up your finance system with small payments. It doesn't seem to be good value for money. It might be that it works for them in terms of their expenditure, but I think you've got to look at the total cost of the council when you look at how it might impact the finance team and reporting and stuff.
Yeah, we would always look at that overall position. Sometimes it's not just financial, and that leasing arrangement will cover, other value benefits that the organisation will get from a lease arrangement, be that social or service. But we'd always look at it overall in terms of value for money, and not putting in a bureaucracy around it that makes it not worth doing for certain.
Okay, thank you. Yeah, Rob.
Just a clarification on something you said, and just to get in my mind. So a lease which has is less than £10,000, you're not going to put on the fixed asset register. You said that that's, if you like, limit. Is that true for everything? Do we have nothing on the fixed asset register below 10,000, or is that specific for leases?
The £10,000 is our de minimis for capital spend. So if it's below £10,000, we treat that as a revenue expense for our profit and loss account. If it's above £10,000, we say that's capital and would be added to our asset value.
Okay. Could I check with KPMG if they think that 10,000 is a sort of I know you'll come back when you properly looked at the accounting, etc. But does 10,000 seem like a reasonable limit to you?
Yes.
Yeah. Oh, yeah.
Okay, that was quick. That was quick. And my last question is on the discount rate. How have you gone about calculating an appropriate discount rate?
I'd have to check with the team who have done the calculations, but we've followed the sit for guidance. We've been on various training sessions to work out the net present value for the right of use asset. I believe we've used the cost of what councils would cost of financing for us as a proxy for that discount factor. But I can double check with the team.
Okay, thank you. Mike.
I think that might be covered in the paper. I think when it's fairly implicit in the lease, then use that rate. Otherwise, you fall back on your cost equivalent to your cost of capital. I had a couple of questions. If we take a lease that was previously recorded as an operating lease and now is recorded as a finance lease, just note that in the early years of that lease, there's a higher P&L expense than the later years because the interest charge is based on the outstanding lease amount. So year by year can be quite different, the overall net P&L effect on a statutory basis. So that's one comment that maybe is not brought out in the paper. On the infrastructure assets, in page 52, on the impact for Wokingham. Towards the end of that paragraph, we talk about a further detailed analysis of spend will not be done as this is not required due to extension of the relief. Of course, that's fine at the moment till 29, but unless, my understanding, we develop the history of the information about what's been capitalised, we could have exactly the same situation in 2030 if we have to take out the cost element and the accumulated depreciation element of previous works. And I'm wondering if it's a wise decision not to record the data unless you think now we can go back historically and recreate. But I know previously we couldn't do that. So it's for you, Graham, I think.
Yeah, I think the bit of work we're not doing is going back over the history to sort of recreate where we've got to and I guess an opening balance, as it were. But I think, and Mark will correct me or add that, we're recording the information going forward in a way we can use it, and once we've got absolute clarity of what the solution is, we'll know then if there's any gaps in what we need and how we do that. But it's kind of the historical position that's the lot of work in terms of the number of assets and the position.
Yeah, I think our focus this year is really with KPMG to get that improved financial set of accounts. And that's not to say maybe from next year we may start to enhance that infrastructure reporting and that data collection even further. So we're starting to do some work this year, but we're trying to balance that against getting a really good set of draft accounts done for KPMG when they come in August.
Okay, so maybe that's something we can revisit each year, whether you're now starting to record that data so we can build up that history if we have to amend the way we count for that fixed asset. Thank you.
Okay, yeah, I think you're right, Mike, about that point about, I don't think the paper does bring out that change year on year in terms of P&L impact, because it sort of suggests that it's just be the same as just split differently, which isn't quite correct. So thank you for raising that. Any other questions on the accounting policies? No? Okay, thank you very much. We will move on. So the next item is the annual internal audit report and self-assessment. So I'll pass over to Catherine to introduce this.
Okay, thank you, Chair. So this report summarises the work of internal audit and investigation during the 24-25 financial year. And as part of the report, I am required to give a head of internal audit opinion on the Council's governance, internal control and risk management framework. I've also included in the report the outcome of a self-assessment against the public sector internal audit standards that we're required to undertake annually. So based on the work performed in the year and based on other assurance mechanisms, we've given an overall opinion on the governance, internal control and risk management framework of 2. So that's on a scale of 1 being the highest and 4 being the lowest. So that means that the framework is substantially complete and generally effective, but with some improvements required. In terms of the work to support this opinion, that's set out in Appendix A1, which is on pages 81 to 85. That summarises all the work and the status as at the end of March, so whether audits were completed, still at draft stage or work in progress, and also where we've given audit opinions to specific audits, those are included in the table there as well. In terms of just aspects of the report to bring members' attention to, since this report was prepared, there's been 3 more audits that have progressed. So the health and safety audits now at draft stage and being discussed with officers. Community safety and antisocial behaviour has been finalised this week. And the building control audit is also at draft stage and being discussed with management. I've mentioned the high-risk concerns in my previous reports. Those are all listed on pages 70 to 71. I know we've had discussions at previous audit committees about some of those older high-risk concerns. So we've gone back, and I'm pleased to say we've been able to clear some of the older ones now. So specifically, the ones on information governance, Graiseley Primary, and reconciliations. We've gone back and we've got evidence now to support those countermeasures have been applied as we would expect. And so in future reports coming to Audit Committee, those concerns will come out of the table, otherwise it will just keep growing and growing over time. So you've seen the full cycle of those audits now and the fact that we're happy with the action taken. There is one audit which was right to buy that's still outstanding, that's one of the older audits. And this was where we didn't have a right to buy policy in place. And so officers have had some training on preparing such a policy, and it's now just going through consultation process. And we've extended the target date for that audit to the end of June, but we have it diarised to go and revisit in the middle of June just to make sure everything's still on track with that one. So that should bring some of those high-risk concerns more up to date now. The report also sets out the investigation activity undertaken during the period, and we're just coming to the end of a National Fraud Initiative data matching exercise, which is a mandatory exercise, and it's an opportunity not just to identify fraud, but to also look for error and clean up our council records. So the further results on that coming to a future audit committee. As I mentioned at the beginning, I've also included the outcome of a self-assessment against the public sector internal audit standards. You'll remember that every 5 years we're required to have an external review, and in July 2023 we had a review by CIPFA and we achieved the highest category of compliance. Obviously we want to maintain that, so the self-assessment we've undertaken now, it's actually the last year of the public sector internal audit standards, 24-25, and they've now been replaced with the Institute of Internal Auditors global internal audit standards. So we're working on a self-assessment against those at the moment, and any outstanding actions from the public sector internal audit standards will get included into that global self-assessment. So the action plan for the self-assessment we've done is Appendix A3. So I think that was everything I just wanted to draw your attention to. So it's the report's coming to committee to review and scrutinise.
Thank you very much, Catherine. It's a very comprehensive report, so thank you very much for that. Questions, comments from members? Martin, we'll start with you.
Yeah, no, I know, I just wanted to comment on what Catherine said. We always ask, like, who audit the auditors, but we get audited you guys get audited every 5 years by CIPFA, so just, we passed with flying colours. I had only one thing. I know it says on page 90, item 2330, that there is currently no data retention policy in place. But I know in the coming item 13 on the agenda, it's the anti-tax evasion policy. It refers to that all documentation evidence collected by the nominated officer will be recorded and retained in line with the council's retention policy. So we haven't got one yet, but we will need one if we start to implement item 13.
Just to clarify, that is specific for the Internal Audit Service. So we do have a data retention policy for the council. It is being updated at the moment though, so there's been work undertaken there. And at the moment we follow that one, but I think under the the public sector audit standards, they're looking for us to have our own data retention policy for audit documentation.
Oh, okay. I've got this. Okay, thank you.
Hi, Catherine. I've got 2 questions. One is on the excuse me, on the fraud detection, if you like, that you did. You closed a number of the categories. A number of the referrals. The closed fraud prevention direct and in liaison with other WBC services and closed another agency. What do those actually mean?
Sorry, which page?
Sorry, page 73 in your table of the summary of fraud referrals. There's a bunch that have been closed with no further action, and then there's 2 other categories of closed. But what do those categories mean?
Right, so the end one is closed where we've reported something to the Department for Work and Pensions, so it's really been their remit to deal with those. Okay.
Sorry, so that's not necessarily closed as a problem. It's just out of our hands.
It's out of our hands, yes, because we don't have the jurisdiction to investigate some of those.
And the other one?
Right, so this is where it's been more fraud prevention activity. So where we've worked with another service, just trying to think of an example. I mean, there was one where there was a mandate fraud and finance actually found it, but we did liaise with them, you know, in terms of best practice. So it was then closed down because it was dealt with, basically.
Okay, so does that imply that some of those might have resulted in, if you like, punitive action is probably not quite the right phrase, but in some cases you might be a question of simply making sure that we don't have that sort of fraud again, so you put in place things to do that. But I assume if we've had some fraud, that means probably somebody was responsible for that. Do they get held to account in this process?
They would do, yes, yeah. I mean, another example I have is Disabled Facilities Grant that we managed to stop being paid out. We intercepted it before it happened, so that's another one that got closed. So it's, you know, it's preventing as well as, you know, detecting. Yeah.
Thank you. Can I ask my second question? Okay, my second question is on page 82 in the governance building blocks. In the first section, we're talking about the risk management. You have a review of risk management governance, and then you have some benchmarking. In the status, we have assurance taken from external review by WBC insurance brokers. Could you just tell me a little bit more about what that means?
Yes, so this is the review that's coming to committee tonight. This was the health check that was undertaken. So I think Paul will be speaking to that later on. So we placed assurance on that work. So rather than duplicate, where we can do, we use other assurance providers so we can get a wider overall opinion on the, you know, the governance, risk management and control.
So from your point of view, do you consider that to be effectively completed then?
It would be complete, yes, Paul.
Is that therefore not an area that we issue an opinion on? Because you then have all that section's been completed, but we don't have an opinion. Is that an area that we just don't issue an opinion on?
It's something that will come through on the item that comes later on. So the opinion will be within that report because it's
okay, all right.
It's
so it's just
the
not
opinion
shown
of
here.
the insurance brokers in the work that they've done. So that's how we just report it, that we're placing assurance on what they've done, rather than forming our own separate opinion, if that makes sense. Yeah.
Thank you, Catherine. Good report, and well done to you and the team for another really good year. That looks like a lot of work you've carried out, so thank you for that. And it's really good to have the report, so thank you. I think I've got 8 questions, I'm afraid. Hopefully they'll be quick to answer, and I'll be quick to ask them. If I can refer you first of all to page 64, and the first paragraph on the right-hand side. Let me just find it again, because I was going where Rob had taken us to. So whilst no assurance can ever be absolute based on audits completed during the year, most key controls are in place and are operating effectively with the majority of residual risks being reduced to an acceptable level and reported concerns being progressed by management to be reduced to a predominantly moderate impact level. A small number of exceptions were identified, and these have been discussed with senior management and where necessary presented to us, etc. Where you've got these sort of exceptions and stuff, I just wanted to understand, because there can be 2 types of things I think you can pick up. It's either where somebody doesn't know something and they're just doing something wrong and it's inadvertent but it's just wrong, or you can find something where somebody knows what they should be doing and they're deliberately doing something different, so you've got sort of poor or malpractice. And I just wondered whether, from what you've identified, whether there were any things that needed to be picked up on in terms of changing some processes, doing some training. I'm not looking for any examples in terms of if you've, no, I don't want people named and shamed, but I'm just thinking, was there stuff that you managed to flush out from this which has helped improve things for the future? That's where I'm trying to get to with it.
Yeah, we definitely report on that in specific audits. That would be in the detail of those particular audits though.
Yeah, so that's good, because that's what I'm always looking at, is you find something and then do we make it better afterwards?
Yeah,
That's good.
Well, that's
great.
part of the management countermeasures as well, because they have to say how they're going to help make it better as well. So, yeah, that's all in the report.
No, that's great. Thank you. Okay, if we can go to page 72, level 3 audits. This is where you're saying that, second paragraph, 4 copies of audits falling into category 3 or 4 audit opinion are provided to the chair of the Audit Committee. That's great. I just wondered if there's any reason why the rest of us can't see them or shouldn't see them, or whether there were so I get that Rachel sees them, and that's a privileged position, but I just thought if there's things that we should know as an audit committee, do we find out about them, or what's the process around those?
Okay, so what we agreed previously was that we just provide a summary to the audit committee of what the issues were for those particular audits, so you get that high level summary, with Rachel then getting the full report. So.
Okay, so we are aware, and you pick up on anything you need us to do, or they need to be actioned, yeah?
Yeah, I think part of this is because this is a public meeting. What we don't want is any reluctance from colleagues to come forward with things or to be completely transparent. So that's kind of the reason why we do it that way, to try not to sort of put people off in terms of being totally transparent and honest when they're being audited, if that makes sense. There's the same question I asked when we started doing exactly the same question. So.
No, that's fine. I'm happy with that. I just, as long as things are being dealt with, I certainly don't want to be airing stuff inappropriately in a meeting. You're absolutely right. That's great. Moving to 74, I think you might have already discussed this in your answer. Just want to be a bit clearer. So this was about the fraud investigation and the blue badge thing specifically. So would I be right in thinking that this might be the thing you've referred to the Department of Work and Pensions? Or am I completely missing the mark?
Not with the blue badges, no.
Oh, okay,
no.
okay, sorry. Then that was me.
We investigate ourselves on the blue badges.
So this was where people have held on to badges when they shouldn't have done. Is that what you're saying? It's
a bit of a mixture. So it can be where people have held on to them where they shouldn't, or where they've been the deceased and they haven't been handed back, or it can be errors in the system. So basically with the NFI, we upload all our data to the Cabinet Office, as do the DWP, education establishments, pensions agency. The Cabinet Office matches all that data and then they send it back to us to investigate. So they might have a match with a deceased person's record, but that person still looks like they've got a blue badge, so that might be an example. Or it might just be that the records just haven't been, systems haven't been talking to each other between the different agencies. So, as I say, it's an opportunity to clear up our records and, get that information correct.
Okay, thank you for that. But the value then of £117,512 is probably not real. It's not a real loss to the council, is it?
It's notional income. So this is calculated by the Cabinet Office. So we take this from the system, so they have their way of working it out. So it's not realisable income, but it's notional.
So if somebody should have been paying for parking and didn't, so they've avoided it, that sort of thing. But we don't know, do we really?
Yeah.
Because they may have had a blue badge and the drawer never used it.
Yeah.
No, that's fine.
It could, it could result in loss of income to the council because that person should be paying for a parking space, for example.
Yeah, but if they've not used the blue badge, they just kept it. Yeah, so it's a made-up government figure that may not be real. Okay. Yeah. Okay, that's fine. Thank you for that. Moving on. Page 89, core principles. This was about unauthorised access to files. Again, I just wanted to sort of pick up on this in terms of the learning points, if there were any. So this was unauthorised access to internal audit and investigation folders and files was found. This was the second item in the list there. Great, it's been discovered. Was there any learning that came from that? I don't know what the learning was, but have things changed as a result of finding that out so that you can avoid it in future?
They have, yes. The IT officers have changed it for us now, so I get a regular report just to make sure only the people within our team can actually access our files. I think it was a case that there's some historic people still on there who'd left the team, still in the council working, but they could still access some of the files if they chose to.
So they may not have done anything, and it's not somebody trying to access something they shouldn't.
No,
but
it was nothing untoward.
No.
It was largely people who'd left, had perhaps worked in the fraud team previously, moved elsewhere, and they just hadn't been taken off the system.
But again, you've learned and tidied up the
yeah.
process, which is all you can ask for. Okay, the one below that did worry me a bit more, the Code of Ethics. It talks about, this was due in March 2024, over a year ago, currently establishing the Council's ethical objectives. I just wondered, who's that stuck with? And can we try and move it along a bit?
Right, so that's with HR, so we've asked the question of them. I've mentioned in the action required part here, but we're still waiting for a response about what the ethical objectives actually are.
Okay.
Yeah, I was going to raise the same one because presumably they're subsumed within other documents. That we don't have no ethical objectives. It's just that we don't have a specific document. Is that what it is?
Yeah, I think what this standard is saying that we need to have our audit strategy linked to the ethical objectives. But as you say, they could be in various different places. So we just want to pinpoint where they are, and we can signpost to them.
Okay. Could I ask you to maybe go back to them and just invite them to have that done so it's a green box before we have our next meeting?
Okay.
Because I think over a year out of date might be enough time for them.
I think maybe someone from the exec management could help, actually. Quick email line to maybe what would suggest.
Sorry, Susan.
Yeah, that's something that I was going to suggest that I could take. And there have been a number of policy updates that the HR team have been making sort of across the board through personnel board. So I'm sure they can do this because they really have been getting on top of things.
Yeah, I'm not trying to get anybody into trouble, as you understand. It's just a matter of let's try and get it done. And if they get a reminder from you, maybe it will be done by the end of the month rather than the next meeting. We'll see, but thank you. If I can refer you then to page 90, the next page, performance standards. This one seemed a bit odd. There is no data retention policy in place. It's not yet due, though. It says September 2025, but it then says outstanding. Is that because the date's been moved? And I just wondered what the consequences are of not having one. It just seemed a bit... I was surprised by this because I'd have thought there would be a data retention policy of sorts, but enlighten us, please.
Yes, this is what I mentioned earlier, so Councillor Andrea. The Council does have a retention policy for the Council as a whole, and we follow that one. But these standards, the global standards, are wanting us to have our own within internal audit. So we retain our records for the financial periods, you know, the 6 years plus one, etc., etc. But I think they're looking for something more specific, so we need to do some work on that.
I've got you, but you've got until September. So. Okay, that's fine. Okay, thank you.
But we still have something in place in the meantime, the general.
Page 91, the annual customer survey questionnaire, this is the red one, along with anonymous surveys, due by July 2023. I just felt, can we just write that one off and maybe just go with 2025 or 2026? Because it just seems a little bit pointless to keep pushing the July 2023 one. If it's not been done, it's not been done. Maybe there's a reason why, there's a legitimate reason, but I'm just thinking, rather than having that outstanding, maybe just close it down and let them get away with it, but we try and pick it up and get back up to speed with it in current time.
Yeah, and the thing is, we do have customer surveys that we send out after every audit that we do.
Right.
This is talking specifically about having an annual one as well. So, okay. So we do have something, but yes, we can change the date on that.
Or just try and get it finished. I'm just thinking, just having legacy stuff that's old like that, it's not helpful.
I think now we've got to the end of 24-25. Now's an opportune time to actually send out an annual survey for the previous year.
Thank you. And same page, the yellow one, benchmarking review. It's not due until 2025. Target date not reached is the comment, but it's not due yet. Has it been moved the date, or what's going on? I'm just wondering why it's sort of target date not reached when it's not yet due.
Right, so this is benchmarking. We've provided some benchmarking data to one of our, we've got an audit group, and we wanted to benchmark across the group, and they're actually leading on the benchmarking exercise. So to some extent, it's out of our hands until they send those results back to us.
Okay.
I think it means the target date has not yet been reached, as in we haven't yet got to September 2025.
So it's just in progress.
Rather than target hasn't been.
Well, that's what it may be my autistic side not quite working that through then, thank you. But thank you. No, really good, thank you.
Okay, Mike.
I've just got one point after Stephen's very comprehensive list. Page 81, about 2/3 of the way down, on the SLAs. We've got a comment deferred, new systems not ready to audit, and I wondered if there's a risk if we're waiting on new systems to be implemented or something we should be made aware of.
Yeah, I mean, this audit was actually requested of us for 24-25 because they were going to look to some changes to the SLA process, but as I say, they weren't ready to be audited at that time. I'd need to go back and see where they've actually got to and see if things have progressed. I do have regular meetings with the Chief Operating Officers Group, so I can raise that again and just see.
So there's nothing specifically that we should be concerned about. It's just a delay in implementing the project at the moment.
It is, yeah.
Thank
and
you.
It could well have moved on since I wrote this report as well, so I will need to just double check with the officers.
Okay, thank you, Catherine.
Okay, any other questions or comments for Catherine? No? Okay, thank you very much, Catherine.
Thank you.
Okay, we'll move on to the risk register as the next item. So is that Susan or? Yeah.
Thanks very much. So you have a copy of the report in front of you with regards to the risk register. As it says on this, with regards to the summary, there are 3 new risks that have been added since your last Audit Committee meeting. One of those relates to children's services system reform that the government is introducing. Another relates to the Independent Commission on Social Care, which again the government has made announcements on. And then the third relates to the regulatory requirements of the housing service. So this is the housing service being regulated in terms of consumer standards. So if I just go through the report a little bit, just again the covering report. So we've got those 3 new ones, but we still have significant risks. So the budget and financial risk actually is absolutely there. And we continue to highlight the importance of the local government financial settlement, that we want it to reflect the true costs of the services that we provide, for example, around children's and adults in particular. And I think that probably the Chief Finance Officer actually mentioned this previously, that the government are focusing on deprivation, which is completely understandable on the one hand, though at the same time it actually does not address the fact that areas like Wokingham that don't have as much deprivation as other parts of the country still have a significant demand, in particular around areas like SEND, children's services and adult services. So there's a real sort of issue there and potential financial impact. So that's the budget and financial resilience risk still remains. There's some commentary there about the SEND and children and SEND and what we've tried to do with regards to the 2 schools where we've offered to do the self-build for the 2 schools, whereas actually the DfE have declined the self-build request. But it does look like the department is still pursuing the schools themselves, unlike other parts of the country. So we're very much on the case with that, and we have got a meeting soon to discuss the next steps and timescales. If we were to have those 2 SEND free schools, that would obviously make a big difference in terms of SEND and the pressures that we have around SEND. With regards to the health and safety risk staff safety register, I just wanted to flag that that register has in fact gone live. It went live yesterday. So the commentary in the report doesn't quite align with what's in the report itself. So it is live and the assurance has been done. With regards to the impact of national reforms, you've got quite a bit of detail in here about what the national reforms are. They are, of course, a good thing. So the risk is not necessarily around the fact that the reforms are taking place, because they are a good thing. It's about the fact that the funding allocation that we've got to actually help in implementing this is quite small, very small, compared to a lot of places in the country. And you can see from what's written in here that we are lobbying along with other local authorities that have received a small allocation. And then if I move on to the adult social care reform, I think that the risk around here, it's the right thing to do, to have an independent commission. And it's good that Baroness Louise Casey is heading that independent commission. It's the timescale, really. We need change in this area in terms of social care, and the risk is around actually how long it's going to take to actually make change in this area. And of course, what's actually happening well before this is the fact that the government have actually released their document in terms of changes to the ICB and health. There's what's called an ICB blueprint, and there are going to be savings made by ICBs right across the country, up to 50%, and those will potentially have an impact in terms of local authorities. And then finally, if I move on to the more detail on the housing services, that's risk 28. So this relates to consumer standards and the regulation of social housing. So local authorities must meet new consumer standards. And for example, what we will be tested on by the regulator is the quality of the homes that we have, our tenant engagement and satisfaction, and the timely repairs, say for example around maintenance, and how we comply with decent home standards. So those are the kind of things that we'll get measured on in terms of the new regulations. So those are, I just want to cover some of the key risks that we have, and also some of the three new risks that have been included and the reasons for them being included. So if anybody had any questions or comments that they wanted to make.
Thank you. Could I just pick up that last point that you were making about the new regulatory
Yes.
requirements? I don't know if you're able to say a bit more about why that's such a big risk. There's a big gap there between where we are now and where the target is. And I know there could be sort of financial implications potentially as well. I mean, from my sort of admittedly fairly limited knowledge, I sort of feel like we should be in a good place with this kind of thing. So I was a bit surprised to see it was raised as such a big risk. I don't know if you're able to sort of explain a bit more as to what those risks are.
I think in terms of, because it's a new requirement, in this, I think if I can draw a parallel with the reforms for children's services, whilst those reforms are absolutely the right thing to do, they still hold risks. And similarly with the housing services, I agree, our housing stock is not actually a big housing stock, and we have really good relationships, for example, with our tenants and leaseholders. I think that once we've done the mock inspection, which is taking place right now, I think that will help inform whether there is the level of risk there. But I think it's more to do with the fact that it's new and a new responsibility.
Okay, any other comments or questions from members on the risk register? Okay, Stephen.
Thank you. You did mention it already about the SEND schools. Very disappointing that the DfE have not accepted the invitation to allow Wokingham to build them, because that would have got them a whole year earlier. And as we know, there's real pressure in the council for that. Do you think that that September 2028 is realistic, or do you think that might slip back further? And therefore, if it does slip back, sort of, have we got any mitigations we can put in place to sort of try and... Because what concerns me most is it's not actually having a school or not, it's the impacts to the children, because that's who's impacted by this. And that's particularly why I'm a little disappointed that the government had an opportunity to help us get there a year earlier, and they decided not to. That sort of seems unhelpful. But I'm just worried about will we achieve that date if we're so dependent upon them, and if not, what can we do?
So we have a meeting soon with the DFE. So my expectation is that we will hope to get more assurance from the DFE around that particular date. So as it says here, it looks like, you know, in other local authority areas, some promised SEND schools are being withdrawn. So it's positive, though, that we're still in discussions with regards to SEND schools in Wokingham, I would say. And I think that we continue to put that pressure on. I think the fact that we've offered to do a self-build is a good thing. I mean, I know that the DFE have actually not taken up that offer, but they can see how much we want to take this forward. At the same time, I think given the level of pressure that we have around SEND, financial pressure, I would hope that the government DFE would want to keep their commitment in terms of having the two schools. They have got a white paper that's due in the next month around SEND, and it will be interesting to see what comes out of that white paper as well, to see where the government thinking is.
Yeah. No, thank you for that. I mean, I mentioned it earlier, I'm on the autistic spectrum myself, and I just know that when people get the right level of support at the earliest possible age and stage, then that helps them to fulfil a far higher potential in life than they can otherwise do. And it just feels really sad that children might have their futures limited. And I understand the pressures on money. I mean, we all do. And I'm not trying to make it as a political point. It's just if we can continue to work in that way with them, that would be really good.
Oh, we will.
Because I know it matters to you as well, and the rest of the leadership team. But thank you for that. I just wondered if I can refer you to page 110 on the cyber security thing. I understand why this is almost a blank page for us because of obviously the sensitivities around it. I just wondered whether, are you sharing stuff outside of this committee with Rachel, understandably so as chair, so that you've got privy to this? Or is this something which maybe we should consider having a part 2 meeting where we could hear more on this? Or because actually it's almost pointless us receiving an update when there is no update. What's your thoughts? I don't need an update. I'm just wondering what you think about that.
I mean, for me, it is important to be transparent, so you know what is happening and how we're mitigating risks. So it could be, part 2 might be a way to do this, as you're suggesting, because we do have conversations, discussions at our corporate leadership team about this. So yeah, I think it would be good to find a way for you to get some assurance around this.
Yeah, I was just going to say that the next report that we're looking at in terms of the risk management review talks about us having a spotlight on different risks. So we could pick that up as part of implementing that.
I carry on, sorry. You've dealt with the homes bit, so I won't come back on that, but thank you for that update. The final bit I had then was, if I can take you to page 118, you'll tend to follow a theme with me about children. So this is the support for children in care transferred as part of the National Transfer Scheme. And firstly, well done to the Council for what it's doing. Obviously, it is a challenge. We all also know that CAMS is under enormous pressures and there's quite some long waiting lists. And whilst not entirely within your control, I just wondered whether the government is able to provide some extra financial support or resources for CAMS so that where these people obviously need that support, that it doesn't push back the processing time for other people already on the list. That was the first question. And also, again, it's outside of the council's control in terms of provision for GPs and dentists, and you reference this in the report yourselves as a control. Are we able to secure additional funding linked to this provision? because again, we're hearing from residents that it sometimes can be hard to get hold of a GP and a dentist. And I'm not saying these people don't deserve it. No, we want to welcome them. We want to make them inclusive in our community. And obviously they have needs. It's just trying to make sure that nobody else gets disadvantaged.
So I think in terms of a provision for GPs and also CAMS, we get that comes through the ICB, Bob sort of footprint. I think it may be helpful to get something around the health, because I mentioned a few moments ago about the fact that the ICB is going through change. So at the moment we're part of a big footprint in terms of Buckinghamshire, Oxfordshire and Berkshire West, and there is differences in provision across that footprint as a population. So it might be worth, in answer to your question about CAMS and GP, we as a local authority do put pressure on and promote the fact that our needs in Wokingham. However, that's against the fact that Bob, that the ICB will be thinking about the whole and will make decisions based on per 1,000 population calculations and how many GPs per 1,000 population, for example. So I don't have the answers. We do lobby, for sure, to ensure that we do get the provision, and we particularly do lobby around CAMS as well. It's just whether you want additional information in regards to this.
I think the fact that you're trying and lobbying is useful. I think maybe if you could bring to a future meeting so there may be some update on that, and hopefully if there's any success, because we don't want to sort of just dwell on it now particularly, but it's just the future direction of travel, that it will just be reassuring for residents, where we hear on the doorsteps about sort of, oh, we've been on the waiting list for years, and I see this and I think, oh my goodness, does this mean that they're going further back? And I'm not trying to play one group off against another. I'm just trying to think about, how can we get the resources that everybody can actually get what they need? And I know it's not within your gift. It's not a council budget. It's different. But it's just trying to sort of make sure that we're raising the priority. And if there is an opportunity to get that for people, then it will be well received, I know.
Thank you.
Okay, I've got Mike first and then Rob.
Just following up a couple of points that Stephen mentioned, just going back to this RIS 5 and the self-building of the schools for SEN we wanted to do, just migrants more than anything else. Is there a financial implication if the DfE said we could do it in 2027 for them? If there isn't, why wouldn't they allow us, and what would happen if we went ahead anyway?
So to make sure I'm understanding your question correctly, the financial implication is because the provision that we have to make for children and young people who have special education needs when we don't have a school is that we may have to provide that outside of the borough. So that's where the general pressure comes, and that might relate to home to school transport as well as additional costs outside the borough as well. So anything that means that we actually have these schools in earlier, so each year obviously brings that additional cost.
Yes.
Now, in answer to your question about could we just do it ourselves, I think we would have to work out the financials of that in terms of what that would mean, because there would be a revenue implication of a capital cost, and so that would have an impact on the general fund.
Even though it didn't affect funding from the DfE?
You mean that assuming that we'd get the funding from the DFE?
Well, sorry, it's probably my misunderstanding. We say we self-build.
Yes.
Maybe I interpreted that we would finance it.
No, we'd be looking to get the funding from the DFE.
So it's still, so
yes.
it is a funding implication.
Yes, absolutely,
okay.
yeah.
So that was that. Thank you for that. Was my lack of understanding, knowledge. Let's get the next point. On a couple of the risks, so risk 15, I did notice we had a date for completion of April 25 and we're saying we're on track, so I wasn't quite sure what that meant. Presumably if it is finished in April 25, it's been completed, or maybe it didn't meet the April 25 date and we just need to revise that and mention it in the commentary, Paul. And the similar sort of thing on risk 21. We've got dates of March 25 and we're saying the ongoing again. Presumably we need to revise those dates, and I think we agreed in a previous committee we'd make reference in the commentary why maybe the date had not been made. So that'd be useful.
Maybe if I can come back
sure.
on that one. With regards to specialist accommodation, we have attained specialist accommodation, and we will. So it's this this particular action is as ongoing in the sense that it's already been, that we have already got purchased accommodation, accommodation, and we will continue to do so, because the more that we do it, the greater the impact on our general fund in terms of cost pressures. So it's a we just maybe need to think about how we present it in a slightly different way. So it's not like we're not meeting the target, we are, but it's just a continuous
process.
So
maybe it's just the way we
yeah,
set it
I think so. Yeah.
And I think finally in the section risk 24. So we've got, so this is waste collection, so I know we're thinking of dropping it, aren't we, in the future, but we've still got the current risk higher than the target risk, but we're saying we've completed the action points we have. So I wonder whether either the target and the current risk should be the same, because we've completed all our mitigating actions, or maybe there are still some mitigating actions to be done to meet it, or maybe we've actually just accepted the risk. Again, it just needs a bit of clarification, I thought.
Yeah, that's fine.
Not saying what's right or wrong. But
sure.
Yeah,
no, it's
thank
a good observation. Thank you. Rob.
Thanks, Rachel. On risk number 4, which I've got on page 106, I think, the uncontrolled development. We have basically everything doing well. I'm concerned that we are underestimating the risk here. But given the issue that we've had particularly recently with the appeal at Blagrove Homes, where there's 350 extra ones, I think we can realistically assume that for the next year at least, uncontrolled development is quite likely, or certainly the planning permission being put in for it. And I think we're underestimating that if we say this, at least that's my view. I wonder what you might think.
I think on this it would be, I can take that particular one away, because technically in terms of the timeframes that we've put here, that is absolutely where the planners think we can meet those timescales. So, but I can take your query, I can actually take that particular query away. If that's okay.
Thank you. On risk number 7, page 109, the adult social care supplier. I'm slightly concerned in that we are showing this as a pretty significant risk, and our mitigating actions seem rather limited. And I just wonder if there should be, I appreciate the fact that review of care and support framework is quite a broad thing, but still it's just seemed to me that it's quite a big concern, and a relatively limited set of mitigating actions. I wonder, again, if that's something that a bit more attention ought to be paid to.
Yeah, sorry.
I just wanted to say, sometimes if we do not have a lot of control over the risk, it's a bit, maybe we're fooling ourselves by putting mitigation actions on it, so that's part of the reason as well. Mitigation actions for risks that we don't have control over are maybe not give us a full sense of security, I think.
Sometimes you do have to accept the risk, otherwise you just wouldn't go on.
But I think that's why we have the targets, isn't it? So the mitigating action should be enough to get it from where it is to the target, rather than eliminate it.
Exactly.
Yeah.
Yeah, but I think whilst you're correct, obviously if there's a risk that you can't do anything about, then you stick a note there. But I don't believe that is the case here. I think this is an area that we could do more about if we tried.
Perhaps we could come back to that one.
Yeah, I think so, because I think it's understanding what you think we could do more of, because I think that where adult social care is concerned, I think that we are. I think we're pretty forward thinking and on the ball, I would say.
I would have to say that I largely agree with that. I think that some of the things that we've done in adult social care and the Optalis stuff is actually extremely good.
Yeah.
But what I'd like, one of the things I'd like to be seeing, if you like, is proactively looking for more care homes or proactively considering anything and more that we can do in that sort of area. And it doesn't seem from this, we might be doing it, but it doesn't seem to be coming across to me from this that we're really actively pursuing other, shall we say, innovative opportunities. Full credit, I absolutely agree with you that we've done some really, really good work in that area, but I still think this is showing a fairly high problem with a relatively limited set of mitigating actions.
So maybe it's more about how we convey, because for sure, in the way that we have already acted, as you mentioned, with regards to care homes and also the Risk 21, which relates to specialist housing need, that actually includes adult social care as well, or adults with learning disabilities and such like. So it's, okay, I think maybe we can look at how we describe and articulate. Yeah.
All right, thank you for all those questions. We need to move on to the next item. Thank you, Susan. So the next item is the Risk Management Health Check. Who's introducing this as this report? Yeah.
Hi, so this is item 12, which is on page 131 even, of your agenda pack. So this is, we referenced this earlier in the meeting. This is an external review conducted by risk management partners who are associated with our insurance brokers and our experts in risk management. This was an independent review which took 2 stages. One was a desktop-based review, reviewing policies and procedures and guidance. And the second one was structured interviews with a wide range of stakeholders, including the exec lead, the chief exec, the chair of the audit committee, service directors, heads of service, and risk management champions. So it's a broad scope across the organisation with a range of staff. Essentially, it was conducted utilising the Treasury's risk management assessment framework, which covered a broad scope. The review itself was conducted back in December and January, and we've gone through and got a final report. I'm really pleased with the outcome in terms of the report acknowledged the Council's commitment to risk management, how it's embedded it in the culture, the significant improvements that we've made over recent years to risk management, how we've positioned ourselves to manage risk effectively, the investment of time and resource to derive value from our risk management processes. Obviously, there's always scope for us to learn and improve, and we acknowledge that, and so there's 8 recommendations that are there, and we've compiled an action plan to respond to those, which you'll find on page 155. I think in terms of looking at it through the lens of the Audit Committee, I think there's 3 particular areas I wanted to pick out in terms of the finding. Is that the corporate risk register is regarded as a reliable centre point to aid focus and scrutiny. So the register that you reviewed tonight is essentially effective for you guys and giving you a fair reflection of the risk position. Policies and guidance represent best practice, and that you also see that in your normally in September to see that policy review. So there's assurance that what you're seeing is in line with best practice, and that we've got a positive risk management culture through the organisation. I'm just going to go briefly through the action plan and pick out the areas that they've identified where we can enhance our current practices and talk a little bit about those. So the first one is in terms of developing a risk appetite and having a broad risk statement, and we're going to look to link that into the council's values, one of which is ambitious, and so it fits nicely with that, and we're going to integrate that with the work we're doing around embedding our new set of values. The review picked up that our training programme, while senior leadership and middle managers were effective in their risk management knowledge, that could go deeper and broader in the organisation. So we're going to tailor our training and induction process to make sure that that's gets to the front line as well. There's an opportunity for us to do more to highlight the positive examples of where we're proactively managing risk, and I'll hope to include that into the updates that we bring to you in future, so we can see that and celebrate that. Also, you've discussed tonight Catherine's annual report, and so the suggestion is that we bring an annual report on risk management to give you that broader and wider picture. And we're working with our colleagues in the community side on the partnership framework, and we're just making sure that our risk management processes reflected in that are effective, and to develop an assurance programme so that we can provide assurance to you that our partnership risks are being effectively managed across the piece. In terms of the 5th action, we're looking to make sure that risk management is embedded throughout the organisation in terms of its DNA, in terms of those HR policies and procedures and how we're operating across the council. The 6th one is to, as I think Susan's already trailed for me, is to do spotlights on specific risks. So we'll do a bit of a deeper dive for you on some of those risks, and we're going to be careful to align that with Catherine's audit approach so that you're not receiving duplicated assurance, but you're getting a broader view of the current risk management landscape. And then the 2 longer term ones is to look at make sure that we're utilising opportunity and upside risk. I think the council's very good at looking for opportunities and innovating. What we're not quite as good at is making sure we're reflecting that in our formal risk management processes and recording it in risk registers. So it's how we develop with that. And then the suggestion was that we look at key risk indicators and key control indicators, and we're going to look at piloting that and aligning that with some of the work we're doing with data and insight, so that we're utilising that data. Essentially, we're collecting the data once and using it for multiple purposes with different lenses that will help inform our risk management process. So that's the report itself and our response to it and how we're going to take that forward.
Okay, thanks, Paul. That's generally a really positive report, so well done to you and all of the team for that. Just a couple of observations from me. I think the number 4 on the partnerships, I think because the partnership side of things is seen as such a crucial part of the council strategy, I think it'd be really good if that partnership framework, the risk governance side of that could come to this committee once it's done, because it's not something we've talked about a great deal here, but it is often mentioned as how crucial it is to the way the council operates. And just finally to say, perhaps we could request an update on this action plan in, I don't know, a year or whenever an appropriate point is for us to have an update on whether the actions are being progressed. Any other comments on that from members? So Stephen and then Rob. Then.
Thanks, Chair. No, you've already covered off some of the things I was going to say. I thought it was a really excellent report, really good initiative, so well done for that. I thought it looks to me like, Paul, like you've shared your objectives for the next year with us, or some of them. Good luck with it, because I think what's been identified is really good, and I think, as Rachel said, it'd be great if you can come back and bring some updates. Don't hang yourself, we're not looking for you to sort of, if you need more time, whatever, because this is quite a lot of work there, and I think it's good to be ambitious with it, but just see how you get on once you get into it, because obviously this is not, you've got other bits of job to do as well, but good luck with it. And also I just wondered whether we might look at having risk management partners come back in say, maybe 3 or 4 years' time to reassess stuff, because I just thought that would have given things a time to get bedded in and implemented, and then either see if there's further things that we might learn from them, or indeed just to say that what has been done is really, really good, because it's always a matter of trying to see sort of continuous improvement, isn't it? Is how can you do things, not just for the sake of doing stuff, but actually how can we become better, how can we be more efficient, how can we use data more effectively, that sort of thing. Thank you.
Thank you, Rob.
Two things. One is I really first of all, I also think it was a good report. And I really liked the idea in there of emphasising, if you like, the positive aspects of risks. I think there is a danger that the council, probably all councils, tend to be risk averse. And if we are too risk averse, it will stifle innovation. I think we are quite good at that. So I think lauding that and publicising that is quite a good idea, showing where the council has taken risks and produced a positive outcome. Not necessarily to emphasise the positive outcome, but to emphasise the fact that we take risks and it can produce good things. So risk can be good, not bad. And I think that's a really, that was mentioned there. I think if we can do something along those lines, I think that could be quite helpful. Now, my actual question really was the idea of the risk spotlight, and particularly working in conjunction with Catherine so we don't get overlap, is great. I'm just not quite sure, how do we pick, or who picks and how do you pick the particular risks to put that spotlight upon?
And should the action owner be the committee rather than the risk management group? Question.
Yeah, I think what my intention was to bring a spotlight as a model for you to look at in July to make sure that we've got it right and we're pitching it and it's useful and it's going to add value to it. And then as part of that, we'll bring a programme of what we think those risks are. But hearing tonight, I think you'd want a spotlight on cyber. Maybe we do that in September and then develop a programme from there.
Yeah, Mike?
So what we would review was the controls you set out with regard to cyber. Is that the purpose of our review? Or I wasn't entirely sure, to be honest, what was meant by the point. So similar point.
Yeah, I think it would be an opportunity to get. I mean, reviewing the risk register, you have a limited amount of time to review 20 odd risks. And some risks don't necessarily attract your attention quarter to quarter, and it would be an opportunity to go a little deeper into a risk to see where it was, to look at the controls and how it's rated, and then look at the mitigating actions to give you another level of assurance over those risks that don't necessarily get the attention, so that you're assured that they are being managed effectively.
And partners, is that other local authorities we're referring to, or more broad term, anyone we work with?
No, more. It's more broad. So the ICB that Susan talked about would be one of our partners. I know that their risk management is very strong and effective, but also you've got the formal partnerships, but such as the community safety partnership. But then you've got the less formal partnerships with community and voluntary sector type arrangements.
Thank you.
Yeah, Martin?
I picked up on the same point that Rob did about, for example, the attitude towards, positive attitude towards risk. But I just want to say councillors also play a key part in that one, yeah, because I was, if, for example, a project like the Foresters with Imagination, I know some councillors have criticised that one, but that was the risk to us financially was zero. The only risk to us was maybe the pride of some councillors and some staff, and the upside was significant to reach areas. So if we already sort of criticising as councillors some of those projects, then it's very difficult for the council themselves to maybe think out of the box and bring out, encourage staff to think about ideas and challenges to out of the box. And we're talking here, California crossroads. I mean, the reactions were quite, or even thinking about discussing parking payment options was already. I mean,
pretend we get into that detail, but isn't one of the good things about our committee is we're not political. So,
yeah.
Those things hopefully don't go on around this table.
We certainly need to avoid getting into any of those kind of discussions. This is about, we are monitoring and scrutinising how effective the risk management is in the organisation. Opposition councillors will always oppose, that's their job, but that's not a discussion for here.
It's a bit how we,
yeah.
I was just discussing and how we can influence it indirectly as well. That was what I was trying to point out.
Yeah, so with partnership working, we might be looking at, what are the risks with partnership working, what are the opportunities, but also what are the risks? Are we delegating our responsibilities to partners that we haven't done due diligence on, for example? I'm not saying we are, that's just an example of a risk. So that's where I would see that sort of going in terms of, and that's not something we've really looked at in terms of the effectiveness of the risk management of it. Okay. Any other comments on this report? Okay, good. Thank you, Paul. Right, and the last substantive item we have is the anti-tax evasion policy. So this is something that's actually requested by this committee, so we haven't had a policy on this before, and it essentially ensures that we are compliant with the Criminal Finances Act. So, Catherine, do you want to briefly introduce this one?
Yes, so this policy will accompany the other 6 fraud policies that we've got in the Constitution. And basically, there's a corporate criminal offence of failure to prevent the facilitation of tax evasion. So the council could be exposed to unlimited fines and damage to reputation if we don't have something in place. So the policy covers the responsibilities of officers and other associated staff, how to raise a concern, where suspicion should be directed to, which is to the Deputy Chief Exec and Director of Resources and Assets. And the policy is coming to committee tonight to agree and also make a recommendation to council to adopt the policy, and it will go via the Constitution Review Working Group. And I understand that after it's been approved, then there'll be a series of sort of risk assessments in terms of what, are there any gaps and, and that sort of thing. That'll be sort of phase 2, yeah? Yeah. Okay. Any comments on the policy or questions for Catherine? Yeah, Mike?
Really minor, Catherine. I mean, generally I thought it was a very good policy, actually. I did wonder on the bottom of page 161, the last paragraph talks about, it defines different types of taxes, and we just seem to have a row sentence at the end, which probably just needs to be cut out. It was probably replaced earlier on in the document.
Sorry, the very last paragraph you're referring to?
Yeah, we talked in the last paragraph, so we defined what tax is, i.e. corporate tax, VAT, income tax, etc. And then we got right at the end. It's not the same as tax avoidance, which is legal minimisation. I think that is earlier paragraph. You can just take that out.
Yeah.
So very minor.
Any other questions or comments, Rob?
If we're talking really, really minor things, there's a form referenced in here that should be attached, which seems to have gone missing.
Right, that has just been recently developed, and I did share it with
I've asked the same question, and I've seen the reform, and it's fine.
I just want to ask, how much of this was approved in November of 2023, and like which parts are new, if any?
It's a new policy for the council, so we haven't had one amongst other fraud policies.
And what about the November 2023 one? Was that something different then?
So that was basically in the Constitution. We have 6 fraud policies. We've got anti-bribery, anti-money laundering, etc., etc. Those came to committee in November 23, but this one hadn't been prepared at that point, so this is subsequent to that.
Okay, cool. Thank you.
So this one needs to go through the same process of going through full council.
Good. Got it. Thank you.
Martin?
I had the last question. So my understanding, this is like a framework that we can in the future audit ourselves against, for example, if we wanted to. Yeah. Is that fair to say?
It can be used as framework to do that, yeah.
And some of the things like, okay, maybe appropriate staff training, maybe establish internal procedures. Those are still things that we're going to now build on. Once we have the framework, we're going to extend those ones. Is that?
That's right.
That's right. Yeah.
In terms of training, we're looking at fraud training generally. We want to set up a package for everyone to be able to use. We're updating all the fraud website at the moment, the intranet, and then eventually the internet. So those are in developmental phases.
And then maybe you also have to include maybe a mechanism to check if it is working, if the preventative procedures are effective or something like that. But that is the next part. That is the next phase.
Yes. So as I said, there's a risk assessment, and then we'll be looking at what controls are actually operating.
Yeah, Mike?
Just a philosophical thought. This policy is around anti-tax evasion, and then we obviously have the subject of tax avoidance. Has there been any conversations whether the council should have a policy on tax avoidance on moral grounds?
Yeah. No.
It's a leaving question, isn't it, for the evening?
No. Not specifically. We have obviously discussed tax avoidance, but there's not been any headway to make an actual policy on it yet.
The council wouldn't be unique in that point of view, but it's an interesting conversation.
Yeah, okay. Okay, anything else? No, okay, so the recommendation asks us to agree this and recommend it to council via the Constitution Working Group. So are we all happy to do that? Can I see a show of hands? Yeah.
Subject to those changes.
Yes, yeah. Okay, thank you very much. Okay, and that leaves us with the forward programme. So this picks up, so the next meeting will pick up a couple of the areas we've already identified for improvement, which is good, so things like the assurance mapping. I've agreed with Catherine that her next report will come to the November meeting rather than the next meeting in September, rather than the meeting in September, because normally at that point there aren't. Am I getting this right, Catherine? Let me just check I'm saying the right thing. Yeah, so sorry, rather than July, it would come in September, is that right?
No, it would come into the November meeting.
Okay, so rather than September.
That will be the quarter 2
yes,
report,
that's
so
right.
there'll be more in there.
Yes, I was right originally, wasn't I? So there's not that much to report on usually for the Q1 report, so we've agreed that actually that will be rolled up in the Q2 report in November, that's correct.
Because many audits are just getting underway,
if
being
members are
planned and
happy with
everything,
that.
so there's not an awful
sense.
lot to report at that point. So.
Okay. Any other comments on the forward programme, what we've got coming up? Anything missing people are expecting?
Will there be a review of risk management in the July meeting? Risk register? No, so we won't do that one either.
But we can look at the proposal for the spotlighting for risk, that one, so we'll add that one in, yeah. Okay. All right, we'll end the meeting there. Thank you very much, everyone, for all of your contributions this evening. Thank you.